So comparing your current rent to a potential mortgage can often be like comparing the payment on a Toyota Camry to a Porsche 911. And here's what I mean by that. So if you go into your typical rent versus buy calculator and plug in your current rent, investment assumptions versus the assumptions of your potential home you might be looking at, it's important to consider the additional square footage, the additional amenities, and all the additional things that come along with home ownership when running that calculation. My point is, it might not necessarily all be apples to apples when you're running the math. I want to point out, though, in this current housing market that we're sitting in, housing prices have appreciated as much as 100% in the last 6 years in some markets. Rates have nearly tripled relative to their lows in 2020, and it is a fact that it takes a lot more prudent decision making to make a good decision when entering a home purchase. Now more than ever, having a reasonable down payment to save on things like private mortgage insurance and additional interest costs are almost necessary to make the equation make sense when people are looking at buying a home. So that being said, there's a ton of baked in factors that you have to consider to see if it's going to be feasible for you to enter home ownership. But I hear a lot of potential renters talk about how I'll just save the money that I don't have to throw towards a mortgage or the interest at the bank in those first years and invest it. And in my experience as a certified financial planner working with clients who are trying to flex those muscles of diligently saving, that's a lot more easier said than done. What typically happens with 90% of renters is 60 to 70% of that additional savings relative to buying a home gets spent on vacations, fancy meals, or new electronics, and they only accomplish about 30% of their savings goal. So the beauty of entering home ownership in a prudent manner is that you now have a forced savings account with an asset that you can leverage in hard times as long as you built enough equity when you enter the transaction. So that being said, I'm curious if you could post in the comments, where do you think the housing market's going in the future? And do you think it's going to be very regionally specific to where we see markets like Austin and Miami have major disruptions and markets like Atlanta and Denver continue to see appreciation? Or do you think we're going to have a nationwide movement in the housing market? Nonetheless, we here at TimeWise help clients run those numbers and determine if and when they're ready to buy a home. So drop a comment below or reach out to us directly if you'd like us to take a look.